Good afternoon, everyone. Every holiday we celebrate in the United States has the intention of having us think, pause, and reflect about a person, an event, or persons. So too this week, we pause to celebrate and honor the life of Dr. Martin Luther King. It was about 60 years ago that he gave his I Have a Dream speech on the steps of the Lincoln Memorial. And in that speech, we know he called for equality, but his initial intention was to demand the elimination of economic inequality. He also demanded that all people have a right to gainful employment. At the New York Fed, we're committed to supporting an economy that works for all segments of society as well, and working with people and organizations who have a similar mission. Good afternoon, my name is Otho Kerr. I'm a director in the Community Development Group here at the bank, and we're delighted to have you here. The remarks that I share today and the remarks that the other participants may share with you are their own, and they don't necessarily reflect the views of the New York Fed or the Federal Reserve System. For those of you in the auditorium, we're really glad to have you here. This will be a 2-hour event, no breaks, no Q&A. But if you have some questions of the participants, we're going to have a reception afterward, and we'd be delighted to have you stay and join us to ask those questions and to network if you want to. We will have this event recorded. It will be publicly available on our website after the event is over with. And for those of you online, welcome. We wish you were here. There are about 600 of you online. And the next time, we hope you'll join us and be with us in person. In the glorious speech of his, Dr. King said, "We refuse to believe that there are insufficient funds in the great vaults of opportunity of this nation." It's that very belief that drives the people you'll hear from today. So let's get started. I'm going to pass the baton to our John C. Williams, the 11th President of the Federal Reserve Bank of New York. John.
Well, good afternoon, everyone. Let me add my thanks to everyone who's joining us today for the program, either here in the room or if you're watching virtually. Now, this is the second event in our Economy That Works for All series. These events are part of a larger effort to establish what we at the bank can do, both within our organization and together with our partners, to advance equitable growth. We have many great minds here at the New York Fed, and equitable growth is one of the key areas that's best approached when we bring together teams and individuals from across the bank to tap into their insights and leverage their capabilities. So we are able to bring together the unique perspectives and knowledge base with experts in research and community development, legal, market, supervision, and operations and resiliency. And this type of collaboration allows us to better understand the ways that we can break down barriers and set up opportunities that people need to fully participate in our economy. At the core of this conversation is the understanding that an inclusive economy doesn't just help those that are in need of more or different opportunities. Rather, it boosts the economy more broadly. When we're focused on building a strong economy and inclusive labor force, there can and will be tremendous benefits for all. And our mission here is to make the U.S. economy stronger for all segments of society. So this is exactly the type of conversation and work we must be engaged in. I mentioned earlier that programs like these are meant to bring together people at the New York Fed and those working within the communities that we serve. There have been many areas where we have seen this model of connecting, convening, and catalyzing to be successful, from health, housing, food insecurity, the future of work, and so much more. So today, our focus will be on moving toward an economy that works for all and the challenges and opportunities for equitable growth. We'll start by looking at how to best support Main Street through small business finance. Then we'll explore resolutions around natural disasters and resiliency. And we'll close with a very important topic of broadband access and opportunity. So I'm grateful for all the speakers and the panelists and everyone who's attended, some of which, of course, my esteemed colleagues here, and others who are leaders in the 2nd District and beyond. Thank you for your participation today and for your dedication and commitment to this important work that we do every day. So with that, I'm looking forward to the many great conversations today, this afternoon, and I'm sure they'll continue far beyond today. And now I'll pass it over to my colleague, Andy Howitt, for the next portion of the program.
Thanks, John. Good afternoon, everyone. I'm Andy Howitt. I am the Director of the Division of Household and Public Policy Research in the Research Department here at the bank. I'd like to join John and Otho in welcoming everyone who's here and online to the New York Fed and also to this event, an economy that works for all, moving toward equitable growth. I'm going to speak for a few minutes in order to describe some of what the New York Fed, specifically in the research group, is doing in the area of equitable growth, and the reasons that equity in the economy is a focus here. Of course, as Otho mentioned, everything I say will be my own views and not those of the Federal Reserve Bank of New York or the Federal Reserve System. I think it's useful to start with the why question. Why do we devote research time and effort to questions related to equitable growth? Well, John's already touched on this in depth. Our mission at the New York Fed is to make the U.S. economy stronger and the financial system more stable for all segments of society. That's the third time you've heard that mission today, and that's because we feel very strongly about it and we really like our mission. The reference there to all segments of society reflects our commitment to equitable access to prosperity and stability. So understanding how different parts of the society are doing economically is at the center of our mission. Now, the Federal Reserve Act calls upon us to achieve maximum employment, stable prices, and moderate long-term interest rates. When you think about how to maximize employment while maintaining price stability, it almost has to involve bringing people who are currently on the sidelines, either the unemployed or the underemployed, more into the mainstream. Now, how much of a difference can that make? It can make a very big difference. Our colleagues at the San Francisco Fed have estimated that output could have been over $30 trillion higher between 1990 and 2019 had racial and ethnic minorities had the same educational and employment outcomes as white people. And this isn't all. Factors like inflation, interest rates, and access to financial services can have large impacts on families' well-being beyond what they earn in the labor market. In research, we see it as a major service we can provide to contribute to the world's understanding of such disparities and their sources. But studying equities in inflation, labor, and financial markets is not just something we do as an academic exercise. Understanding these differences and how they affect and are affected by our policy tools is crucial to our effectiveness as a central bank. The tools at our disposal for accomplishing our mission are limited, and their effectiveness is determined in part by how equitable society is. Let me give you an example. A challenge in monetary policy making is the trade-off between inflation and unemployment. In the current environment, my research colleagues Raji Chakrabarty, Maxim Pinkovsky, and their co-authors have documented that the rise in inflation since 2021 has been more burdensome for some racial and ethnic minorities, namely Black and especially Hispanic households. Understanding the impact of inflation on various parts of the economy is a valuable input into the discussion of the burden imposed by rising prices. Staying on the same theme, but from a different angle, a key way that monetary policy affects the economy is through the household sector. But how a household's decisions are influenced by Fed policy depends on whether and how that household is connected to the financial system. So increasing financial inclusion has the potential to enhance the effectiveness of monetary policy. Seen in this way, our responsibilities in financial services, financial institutions supervision, and community development are closely related to and support the effectiveness of our monetary policy strategy. And understanding the role of disparities is central to that discussion. In order to make sure that we understand how building a more equitable economy can increase the effectiveness of our policy tools, we've established an Equitable Growth Studies Department in the New York Fed Research Group. Economists in that department, as well as others in the group, have created many products that address inequality in the economy. One is our Economic Inequality blog series, which we started publishing in October of 2019, and which provides timely and accessible analyses of these questions. Indeed, the inflation disparities work that I referenced earlier was in the EI series, and tomorrow we'll be publishing an update that looks at additional inflation disparities across groups based on income, education, age, and geographic location. In addition to blogs, we produce working papers with deeper, more technical analyses, and we participated in externally facing events like this one to foster discussion with the public on these important topics. I'll close by raising one additional reason why we do this work. The New York Fed and its employees are part of the community, and we put a lot of emphasis on contributing to our community in whatever ways we are able. We're sure that by sharing our research and listening to you, we can together be more effective at getting better outcomes for all our families and the future. With that, I thank you for your attention, and I'll hand it back to Otho.
Thanks, Andy. To many of us, equitable growth involves the dismantling of structures and systems that prevent families and households and individuals from equitably participating in the economy and benefiting from its fruits. Conversely, it also involves the creation of structures and systems that advance inclusion in the economy. It also involves the opportunity for economic mobility. And lastly, we believe that equitable growth involves the ability to remain resilient, for households and families to be resilient when it comes to economic shock and economic disruption. In the next three segments, you'll hear how communities and the Fed are working to advance this concept of equitable growth. We'll kickstart each session with a talk from a community member who will share a real-world experience, and then we'll follow each talk with a panel that will dive a little deeper and explore some of the challenges, some of the strategies and research which advance equitable growth and shine a light on the great vaults of opportunity that I talked about earlier in these spaces. I'm going to ask the moderators and the panelists for each respective session to take their seats as I introduce each session. So, first, we turn to small business finance and shine a light on the heroes of Main Street. Diane Dobek, the EVP and head of supervision at the New York Fed, will lead our panel discussion. But let's get started with our community talk. I welcome to the front Adina Bio, and she is the founder and CEO of Adina Bio and Company. So I'm going to ask the panelists and moderator to take their seats and for Adina to be prepared to give her talk. Thank you.
Hi everyone. Thank you for having me here today. I'm going to share a story with you that is unique to me, but it's happening all across the country, in communities, particularly communities of color, to women of color. You won't hear these stories because there's a certain level of shame that is associated with being poor and rejected in this country. And it takes vulnerability for us to be open and share our struggles so we can get the help that we need. I started my journey into the restaurant space. I went to a small college in Teaneck, and I fell in love with that community. We had lots of amenities, restaurant, play, eat, everything. I graduated, went back to my community, and it dawned on me that those amenities that I enjoyed while I was away at college, when I came back, none of those amenities were in my neighborhood. And I started to ask why. One of the restaurants that I truly fell in love with while I was in college was IHOP. I said, I want to bring an IHOP to my community. I applied to IHOP at the age of 25 through a very rigorous process and advocacy from the only Black woman executive at the time at IHOP Corporate, Nicole. I was given the IHOP franchise. I was happy. I was elated. Great. Now I'm going to go to my local bank and put in the application to get this IHOP built and financed. I came home. I did the business plan, put the finances together. This was 2006. I tapped the business application for my loan. I submitted it to my local bank. Local bank reviews it, turn me down, and say, here's the reason why. Okay, no problem. I fixed that, submit it again to local bank number 2, local bank review it, and turn me down. Here's our reason. I fixed that reason. I went to bank number 3 reviews it, and turn me down. Went to bank number 4 reviews it, and turn me down. This went on for 7 banks. And a year and a half later, IHOP Corporate, Nicole calls me, and she says to me, Adina, it's been a year that we have approved you. Where are you, and when are you opening? And I said to Nicole, I am nowhere because no one would finance me. Nicole was shocked, and she said, what do you mean? Do you know what it means to be an IHOP franchisee approved? I've never heard of such a thing. She said, give me a minute. Let me make some phone calls. Nicole sits in California, and she makes a call to Arizona, to GE Franchise Financing, and said, hey, I know you guys reached out to me. You guys want to be our premier lender. There is a franchisee that we love in New Jersey. We would love for you guys to finance her, help her open her first IHOP. 30 days later, GE financed me with a $1.9 million loan. The application was $1.5 million. So great. At a 25-year-old, living in poverty, family is poor, I'm told now, you have to go find $500,000 to make this transaction happen. I did. I went and got a high interest rate loan for 25%. I went and closed on that GE loan. We closed, we opened the IHOP. Everyone was happy, my community was happy. I was depressed, I was over-leveraged, and I was bankrupt by the time my first IHOP opened. But guess what? This is not new. 61% of Black women in this country are going to start their businesses just like I did, with no financial institute helping us out or investing in us. 4 years later, I opened an IHOP. That IHOP went on to break records. We was the fastest grossing IHOP in the IHOP system 3 years into it. We hired 78 people from our local community, and by the way, it's still standing. And everyone that worked there today get free dental, free vision, and free life insurance. 4 years later, I have 7 minutes. No, clap. 4 years later, I go to open my second concept called Cornbread Farm to Soul. I go to my local bank, and the banker said to me, you are killing it as an IHOP franchisee. Why are you trying to do this? To us, this is a startup. Why don't you open another IHOP? And I said to my local banker, the purpose of this is for me to open this and franchise it and get more women, particularly women of color, into the franchising space. Again, no bank financed me. I went ahead and opened Cornbread Farm to Soul with my own funding with my co-founder. 3 years later, starting up another concept, Urban Vegan. I am 15 years into the restaurant space. I go to a local bank. You know, we don't do startup that are restaurants. This is not a startup. 15-year veteran in the restaurant space, I would argue that I don't open restaurant or a startup. No bank is interested. I go ahead and I fund Urban Vegan Farm to Soul, and it's open right now in Newark. 15 years into this, no major financial institution, 8 restaurants, by the end of this year will have 10. There is no major financial institution that have participated. And let me tell you our impact so far as of this presentation. Keep clicking. As of this presentation, we have 226 employees. 54% of them are women, 76% of them are Black, 83% of them are from sensitive communities that are disinvested in. 58% of them that are in leadership are women. Our average wage is $15 over that of New York and New Jersey. In what King said, in what happened next, for a society that have done something special against the Negro for 100 years, must now do something special for the Negro. I stand here before you that we are women, Black women particularly, and we are shut out of participating in any meaningful way in the financial, which is what America was built on. When you are trying to have an impact and you are told, go make Black girl magic, it's exhausting. I am constantly swimming against the tide. There is nowhere for me to go to scale my business. CDFIs are not interested if you're asking for more than $500,000. Every time I go to a bank, I am told, go prove yourself more and more and more. I cannot. I will not be able to survive my business if there is not a financial intervention. The call to action to everyone in this room, as we sit and think about how do we advance, how do we make Main Street workable for everybody? Banks have never done anything for community of color unless it's been mandated. Sad truth. We need an intervention. Because I know I will not grow to my greatest potential if someone don't intervene on my behalf. So I'm going to close by reintroducing myself. My name is Adina Bayo. I do not wear a cape, not a hero, but I wear a heart that will not quit. Because there is a community of people that is depending on me to not quit. Because their survival depends on me staying strong. Thank you, guys.
All right, so our segment is supporting mainstream heroes, and of course we've just heard from one, so we're going to be a very hard act to follow. My name is Diane Dobeck. I'm the head of supervision here at the New York Fed. It is my pleasure to host this panel. We have a very ambitious agenda, 25 minutes. We're going to try to cover several topics. We'll discuss the small business development sector, how it fared leading into, during, and on the other side of the pandemic. And we're going to get advice from this expert panel about what more is needed. So let me introduce the expert panel. Their bios are in the program, so I'll just speak very humbly about them, and they don't need introductions. But Claire is a colleague of mine here at the New York Fed. She's an expert in community development analytics, and you'll hear all about her research and her findings. Kristen, she is a major person at the City Foundation, and she focuses particularly on delivering community solutions. And then, of course, Lou's here. She is the CEO of a leading nonprofit that helps facilitate capital, access to capital, networking, and coaching. So we're going to do this in a few segments. I hope we'll get through all the topics. If we don't, of course, you can catch us after, and shall we get started? All right, so the first is setting the context. So Claire, what do you see from your vantage point? What are the most significant barriers to business development and growth?
So I think I'll just start by echoing a couple of themes that Adina began with. The first is that there are really notable disparities in earnings between white and Black and Latino households in America. So the typical Black or Latino household earns roughly half the earnings of a white-led household. And that has bearing on financing to start a business because most entrepreneurs bootstrap. They come knocking on the doors of their friends and family, and they tap their own bank accounts in order to start a business. The second is that there are disparities in wealth. And I'll say on the earnings front, everything that I'm going to say about race and ethnicity is exacerbated by gender. So in terms of wealth disparities are acute. Typical Black or Latino household has roughly 15 to 20% of the net wealth of a white-led household. In terms of women-led households, they have roughly 55 cents for every dollar of net wealth as a male-led household. And so that's a big deal because if we take specifically house ownership, there are real differences by race and ethnicity in terms of home ownership in America. And typically, if you walk into a bank, like Adina was describing, you often have to make a personal guarantee in order to receive debt financing. And that's a difficult thing if you don't have a house to pledge. It's also very scary if you have a house to pledge. And you can talk to any business owner and they will tell you that that is a very a grave moment for them. The third thing that I would just point out, and I think Adina also spoke to this, is that there are really big differences stemming from those first two trends in bank relationships, financing relationships. And so coming into the pandemic, we did research in our small business credit survey that indicated that if you control for businesses that self-identify as healthy or stable, differences in the propensity to have a recent lending relationship with a bank. It was over 50% for white-owned businesses, and it was roughly a third for Black and Latino owned businesses. So those are really three key points to just walk into and understand coming into this discussion.
And so Claire, those show up in perhaps lack of credit history, not having a stable income, lack of savings, and all those things seem prevalent in your research as well.
That's right.
So I'll shift gears, Luz. So we'd welcome your perspective, and what do you see as the main drivers and disparities, particularly, as we heard from our speaker, from minority or women-owned businesses? What do you see as complementing, maybe from a practical perspective, the research that Claire's done?
Sure. So, banks have a very limited box, right? And they look at a business and you have to be in business for 3 years. And the business owner has to have credit, or the business needs to have credit, or their loans are too small, or the business revenues are too small. They're not profitable for the lending institution. And so, unfortunately, those happen, to be in minority and women-owned businesses that always seem to get, pushed out of the credit line. And one of the things is, which is unfortunate, if you look at micro businesses in the United States, those with 5 or less employees, including the owner, represent about 92% of small businesses in this country. And if you think when it comes to Black and Latino-owned businesses, over 90% are sole proprietors, right? And so these are the businesses that have been excluded from the financial system, that haven't been able to participate, which is tragic because we see that when they get access to the resources, the capital, the support networks, they can do amazing things like Adina has done, right? And so we need to enable, we need to create a more inclusive financial system where we have more Adinas coming as the success stories and not the minority of what we see in the financial system. But this is not something that happened just, with COVID. Long before COVID, small businesses owned by people of color and women were having significant challenges accessing the capital that they needed. And now if you put on top of that, we're seeing an American entrepreneurship renaissance. And if you see the inflationary pressures, which you all talk about, labor dynamic, supply chain challenges, interest rate hikes. We're just having all these headwinds against these small businesses that it's going to be really hard for them to survive. And we either take control or we're not going to have small businesses in America.
So Kristen, we're going to shift gears. So you have yet a different role. So City Foundation, what do you see on the horizon? What can we do to provide more ready access to financing for small business owners?
Right, well, so as Lou said, small businesses have headwinds that they're facing, but nonprofits is the support systems, the infrastructure that we created to help those small businesses also are facing headwinds. And if we look at COVID, what we saw was overwhelming demand for both technical assistance and small business financing, and nonprofits that were stretched to the limits and barely able to respond. We really took a two-prong approach of trying to provide capital to small business technical assistance providers so that they could increase their operations, bring on more staff, serve more businesses. And then we really tried to provide flexible capital to CDFIs, which are nonprofit loan funds, who could provide flexible financing to those small businesses. And just as much as COVID is a particular point in time, it's given us an opportunity to really look at an intense activity that has been deeply studied and has a lot of data. And I think that's one of the criticisms of sort of small business TA and CDFI space in the past, is that there has been a hard nut to crack in trying to show cause and effect and impact. But now we're able to really show it in a compressed way. And so for, just as an example, we provided $25 million in grants to 50 small business organizations, and I just got those final reports in. And those 50 organizations served 140,000 small businesses, half of whom were sole proprietors, and 90% of them had less than 10 employees. So you know that it's really those small businesses that are looking for the support, and then they were able to get assistance in accessing PPE, accessing financial assistance, accessing technical assistance in terms of how do they pivot, how do they become an online business. The struggles that small businesses confronted during COVID were unlike anything a small business has experienced, and the fact that so many have come through to the other side really is, I think, a pat on the shoulder to the entire nonprofit landscape that exists to support them, both through capital and technical assistance.
Thank you. So we're going to delve a little bit deeper into the CDFI space. Claire, you've done a lot of research in this area, so can you help us understand how do they fit into the ecosystem? How do they relate to banks, fintechs, local governments, federal governments? We'd love your viewpoint.
Sure. So we've got a CDFI leader here, so Liz, please chime in. But community development financial institutions are really, they're designated by the U.S. Treasury, they're certified by the Treasury Department, but they really are designed to be lending institutions to underserved individuals and small businesses. And they serve rural areas, they serve urban areas, they serve native areas. And they are able to essentially take on a little bit more risk on their balance sheets than banks are, than regulated banks. CDFIs are also invested in, so if you're asking yourself, how are they funded and how are they able to take on the risk? They receive funding from the U.S. Treasury. They also receive investments from individuals, corporations, philanthropies, and others. Often they receive investments from Community Reinvestment Act motivated banks who are regulated. And so those contributions to CDFIs can count towards CRA. I think one thing that's really important to note is my colleagues here have referenced the pandemic and the flurry of just activity and lending in the guise of primarily the Paycheck Protection Program that was dispersed to small business sector, and CDFIs played a big role in that. And I think one thing, just harkening back to a comment that I made earlier about differences in bank relationships coming into the pandemic, there were a number of channels that were fortified to get PPP dollars out. Initially, that program was really leaned in on banks to disperse the funds. Subsequent rounds, I think, having noted the disparities in access, subsequent rounds fortified CDFIs and fintech companies to disperse the capital. And for those of us who've been following the sector a long time, it wasn't surprising that those tributaries reached communities that had previously been underserved. So I just want to kind of give a shout out. I think one thing to note about CDFIs is that they're really supposed to be kind of on-ramps to the mainstream financial system. So it's not just, okay, we're going to lend it to folks who haven't perhaps received bank financing or received financing previously. We're also providing guidance and technical assistance, and that's a really big part of the value proposition. But there's also equally, I think, importantly, they're really designed to bring folks into the mainstream financial system and in a sense to graduate folks to bank financing at some point, which, for those of us who are studying the ecosystem and work in the ecosystem, we know that there's nothing like bank capital in terms of the rates that you can get for your business. And that was why it was sort of the golden ring for Adina and others.
Now, Kristen, you have a unique perspective. What is your organization's North Star, particularly in building resilient businesses, communities, capacity building, community-based organizations generally?
Yeah. So our North Star is promoting economic opportunity, but in the area of community finance, it's really about providing access and recognizing that just as in public transportation, you look for partners to deliver that last mile. I think that in community finance, we look for our CDFI partners to deliver that last mile, reach those clients that we're not well equipped to reach. And I think that during COVID, what we saw was a hotbed of innovation. We saw CDFIs take risks and innovate and sort of bring things off the shelf, sort of these dream projects that we thought would never get off the ground, whether that be third-party originations, securitizations, off-balance sheet lending, a level of innovation that CDFIs had been aspiring to and looking for partners on Wall Street and looking for partners in mainstream banking to make that happen. But the necessity of COVID really drove that innovation and enabled it to happen. So, I think that what we're really also very interested in is giving those nonprofits the resources to deliver on that mission. And I think so many times when someone hears that it's a loan fund and that they're lending money and charging interest, that they forget that that interest really just covers their cost of capital. It doesn't cover their cost of operations. And so these organizations rely on philanthropy and government funding to pay their staff, upgrade their systems, innovate their technology. And with the advent of fintech, CDFIs need to compete. They need to compete with fintech. And a lot of their back office operations are still, antiquated in comparison to the new realities they face. And quite honestly, their clients deserve better. So it's important for us to give them the flexible resources so they can innovate and take risks and grow and become more client-centric and enable them to really deliver the product that their clients are entitled to.
And Kristen, can I follow up on that? It sounds like you have to evaluate, not wear a conventional bank hat when you're evaluating a proposal, but actually think about something different, because as you say, they cannot compete perhaps because they don't have the infrastructure yet. What goes into that thought process when you're evaluating a proposal or what you might support?
Well, so when I'm doing that, I'm really looking at the sort of financial landscape and identifying where, what the missing pieces are, and then reviewing sort of the proposals that come in that are going to try and meet those gaps. So we are partnering with the National Bankers Association, which is advancing a project calling MDI Connect Tech, and it's helping Black banks innovate their technology so that they can have new onboarding and client acquisition, do their KYC, AML with better technology. We're partnering with the Calvert Foundation that is really partnering with several states across the country to deploy SSBCI funding, which is part of the American Rescue Plan. So many states launched special programs during COVID to do specialized lending and grant programs, and they saw that they could partner with CDFIs as a delivery mechanism to really reach into neighborhoods that banks and credit unions had trouble getting to. and really relied on them as a delivery mechanism and saw the success of that. And realize they don't want to let that go. So quite a few states are looking to leverage their SSBCI funding and partner again with CDFIs to reach into communities that we know are not well served by banks or the mainstream financial system. And there are many other examples, and I'd be happy to share that offline.
And I, just for those that, acronyms we use quite a lot here, and that's okay. I'm a master of them. I often forget what the acronym means, but KYC is Know Your Customer. As the head of supervision, I'm compelled to say, we think it's important to know whom your customers are, but it can be a barrier to entry. I can see if you don't have the infrastructure to collect the data and monitor it, so it's a point well taken. Luz, what's your perspective here on CDFIs?
So, I think that they say do not let a good crisis go to waste. And I think that what COVID did, it really promoted and allowed for the development of some very good partnerships and innovative programs. Using CDFIs as the disperser of the funds, the providers of technical assistance, really to help void, that help, cover that capital gap that exists with small businesses. And frankly, we saw that some of the most successful relief efforts to provide access to capital to these underserved communities, which PPP really didn't get to, came through these public-private sector partnerships, using, again, the CDFIs to provide the capital. So you had, state governments, and I'm one, I'll say it here in front of everybody, I don't believe that government can solve the big problem of capital access. Government can enable, can unlock the private sector capital by providing resources like the Small Business Credit Initiative, which is a loan loss reserve or, a loan loss guarantee, so that it attracts banks, corporations, investors to come in. And so these funds brought these lenders, they brought philanthropists, and they brought the SSBCI. And if you think about the components that CDFIs need the most, right? The first thing is access to low-cost capital. Well, when you have the government providing a guarantee and a backstop for the loans, that attracts low-cost private sector capital. Check the box. The next thing is a customer acquisition platform. We don't have big marketing budgets, so we can't make communities aware that we exist, that we are low-cost providers, that we provide loans and technical assistance. So a platform like this one that was created allowed for customers to come into a centralized place and then be able to be selected by different CDFIs. The other thing was a risk mitigation tool. We were able to lend, and then we could transfer those loans into a special purpose vehicle called an SPV, so we could free up the balance sheet and continue lending. We had philanthropic dollars that helped support the work CDFIs do. So overall, these funds, there was a California Rebuilding Fund, the New York Forward Fund, the Southern Opportunity and Resilience Fund. There were 5 funds in total. They committed $500 million in capital. Over $325 million have been dispersed to more than 5,200 small businesses. Over 60% of the businesses were owned by people of color and women. Over 80% were what's called specially CDs, socially and economic disadvantaged individuals, and over 90% were very small businesses. So these programs work. Once CDFIs get access to the resources, capital, access to customer, and risk mitigation tools, they can deliver, and they can deliver very well, and I think COVID proved that.
And to put you on the spot, can you give us a sense of what were the small businesses that benefited? What type of industries, or were they in the restaurant business?
You name it. Yeah. I mean, I behind all these numbers that we quote, they're real businesses and they're real people. And I'll give you one example. So Warren Brown, he has a vegan, nutrient-rich, densely packed energy bites out of Washington, D.C. And he opened his business in 2019. He was just getting a big contract with a large grocery store. COVID hits. He was able to access pennies on the dollar for PPP. And then he was promised part of the SBA restaurant revitalization funding. And as he was getting that money, like thousands of other entrepreneurs, right, there was a lawsuit that was filed. A judge ruled in favor of the individuals that said this funding is discriminatory because it's only for people of color and women. So there goes Warren, like many others, didn't get funding that they were really counting on. And so by now, he's depleted cash to pay payroll. He has no savings. He's maxed his credit cards. And he was desperate. He had talked to a bankrupt attorney. So he found us, thank goodness, through the Southern Opportunity and Resilience Fund in the Southeast. We gave him $100,000. His life is back. His family's back. He now sees a future, right? And so this is what financial inclusion is about, right? Bringing the system together to have systemic change, to create economic opportunity, and to bridge the wealth, the racial wealth, and gender gaps so that people can get access to resources. None of these folks are asking for handouts. They're asking for an opportunity and for the resources they need so they can thrive and succeed.
Thank you for that compelling example. So I knew we were going to run out of time. We have 1 minute left. So I'll ask our panelists if there's one piece of advice or one parting word you'd like to say. Claire?
Yeah, I mean, I just think that, there's a perception of risk, and that can be real. But I think that there are real strides that are being made in getting more precise about measuring real risk and bringing new metrics into the field. And so I think that's really promising. We've seen this in terms of credit reporting and credit metrics, and I think that's a promising direction. I speak for myself and not the Federal Reserve Bank of New York or the Federal Reserve System.
You have 2 sentences. I feel like we're going to be...
I would say the other thing that I really chose to invest in was equity and inclusion for the field of community finance itself. We're investing in NALCAB, the African American Alliance of CDFI CEOs, and Inclusive to help de novo BIPOC-led CDFIs start and expand their operations, make sure that they have access to capital and technical assistance to get certified and to grow their balance sheet. In addition, exposing people to CDFIs as a career path. We're partnering with LISC to launch an HBCU fellowship so that young people are able to identify CDFIs as a career path in addition to banking or whatever else they might be interested in, as well as partnering with OFN to help them create a career resources path so that people who begin a career as an analyst in their first job at a CDFI can grow in that job and see a career ladder. So I think that we have to look at it from every angle. There is no one solution. You have to have that holistic view.
Luz, last word?
I'd say that, the pandemic highlighted how our financial system shapes who gets credit when and in what amount. And I think that a key important consideration for the government is to do more during times that are not times of crises, to be able to understand, to be able to shape the credit creation infrastructure in ways that facilitates small business lending and credit for small business and consumers, both during good times and bad times.
Well, thank you all. It's been a pleasure to meet and know our panelists. I hope you've enjoyed it, and I'll pass it on to Otho for the next panel. Thank you for having us.
Kristen and Claire and Adina, you killed it. Thank you. Natural disasters can set back the economic success of a community in a heartbeat. And equitable growth really requires the ability of communities to be prepared for natural disasters, but to be able to respond to natural disasters as well. Both Puerto Rico and the U.S. Virgin Islands, which sit within the district of the New York Fed, know this all too well. I'm going to invite Chris Armstrong, EVP and Head of Operations and Resiliency at the New York Fed, to the front with the panel that he will be leading. They will shine a light on the importance of relationships and communities faced with natural disasters, especially on Puerto Rico and the U.S. Virgin Islands. But to give our community talk, I want to welcome to the front Frandel Gerard, the Executive Director of Crucian Heritage and Nature Tourism, Inc. Thanks, Frandel.
Thank you so much for this opportunity. My name is Frandel Gerard, and I head up a little organization called CHANT, and we are a member of a nonprofit consortium that was founded by the St. Croix Foundation for Community Development, and Shamari's going to talk about that more. I'm going to talk a little bit about CHANT and what we do and who we are. So, and I wrote it down even though I don't usually read written speeches. In 2016, we wrote a proposal to a New York-based organization called Art Place America. And our opening statement was, caught between the legacy of environmental devastation by hurricanes, and we were referring to, at that point, Hurricane Hugo in 1989, and industries. St. Croix happened to have had the third largest oil refinery in the Western Hemisphere for 50 years. And economic disinvestment. The island of St. Croix, specifically the western end and the town of Frederiksted, has struggled to chart positive economic pathways for residents. Then we were hit by 2 Category 5 hurricanes in 2017, 6 months after we started, we, by the way, got the grant, we started the grant work. And in 2021, we were hit by devastating chemical, explosions. It rained oil on the western side of the island, 7 miles away from a malfunctioning oil refinery. Throughout all of this, Chant, which is a small nonprofit organization that was founded to promote sustainable tourism, had to ramp up and get our tour guides going because in 2017, after the hurricane, cruise ships could get into our port, but they couldn't get into St. Martin or St. Thomas, the largest ports. So in October, we were asked to guide people on tours. And we said, no, there's no phone, there's no water, there's no power. By December, we had trained over 20 new guides, and we took out over 4,000 people between December of 2017 and March of 2018. Still no power. Our original program was Invisible Heritage Identity Memory in Our Town, which is targeting Frederiksted Historic Free Gut Restoration. Free Gut refers to a waterway, and the free refers to probably one of the oldest continuously occupied free Black communities under the American flag. Those properties, not those exact buildings, but the properties they sit on, were owned and occupied by free Blacks in 1777, and they are still owned by Blacks. But we had to regroup, and we worked with the cruise line, and we got our people that were in our training program out cleaning up and deploying all of the donations that we got from the cruise lines, and by visiting disaster recovery people, because the town of Frederiksted had no place to get water, had no place to get food. And our elders were being asked to walk almost 2 miles to the FEMA area to get bottled water. So we did it. The other thing that we did was we continued training. And we've had over 25 young people come through our training program, mostly young people that are considered high risk, that are certainly outside of the parameters of what most employers are looking for. Young men, primarily, between the ages of 18 and 30. And of the 25 young men that we've trained, and 1 woman, all but 1 are gainfully employed. Average income now, this group here at the bottom, they're our last group of trainees, they're all making between $18 to $23 an hour, fresh out of a 10-day training program, because of their capacity and skill set. But the other thing that we did in 2017, 18, 19, and 20 is we had this Free Gut Summer program for young people in our town. It took us 3 years before the people in the town would bring their children to the program. But the person standing at the top in the white shirt, her name is Monique Mo George, is a well-known community organizer. We began training the youth in community organizing. We then also trained civic organizations and faith-based organizations in community organizing. In 2018, our youth led a walkout at our public school because they were in a mold-filled environment. And now in 2021 and 2022, those of us who've been doing community organizing are now leading the environmental advocacy for our community in response to these chemical problems with an oil refinery that is now closed. EPA did come in, they shut it down. And EPA is now working with us. How strange for a community to say that their best partner is the EPA. But it is. And we are now one of the top EJ communities in the United States. We've just begun partnering with, we partner a lot. That's why this works. We had Art Place America. We partnered with locally St. Croix Foundation, St. Croix Environmental Association, VI Good Food Coalition, Sierra Club, the Nature Conservancy, NRDC. By advocating, we now have the CDC finally standing up to respond to a 1.5-year-old request for them to take a look at what we inhaled. And when I say we, I was one of those people sitting in a meeting when something hit us. We don't know what the components of the gas were. We just know that we coughed, that children had projectile vomiting, that people were passing out in their schools, and there were no air monitors deployed. And we do this with no funding. So Chant has technically 1.5 full-time people, but we only get paid part-time. St. Croix Environmental has 2 full-time and 1 part-time. St. Croix Foundation is the biggest, and I think what now, 6 full-time, maybe?
Yes.
6 full-time. And VI Good Food Coalition has 1.75 full-time. And we can get funding all day long for programs. We just can't get funding for sustaining our operations. And we're a territory. We're not US for most philanthropists in the United States. And we're not international either. We're this little colony that sits somewhere that has great difficulty attracting major national philanthropists to invest. But we make it happen. When C got a small grant, they divided it between all of the organizations for the environmental work. When the St. Croix Foundation was able to get some funding, they divided it up between all of us. Everybody, when I get money for training, then we can train their people. The Nature Conservancy has stepped up in an interesting way in partnering to promote the workforce development in the historic space. Now, one thing I don't want to close without saying what we're doing with those buildings. They're all owned by Black families. They're owned by Black families who are descendants of enslaved people. They can't access funds, but we can as a nonprofit. So we're working to build the trust. We now have 2 families out of the 6 that have agreed to lease us the properties so that we can get the money to fix the buildings and put them back into habitation. We've just received $150,000 for the 3rd building down, the little yellow one with no porch, and we anticipate that we'll be starting that restoration project late this spring and training another cadre of 10 to 20 young people to actually work on fixing those buildings. We invite you to come to St. Croix. It is paradise for some, but the reality for the people born and raised there and who live there is it's a tough road. We are, on St. Croix and the town of Frederickstead, the most disinvested group of people. We have very little access to capital, and we have about a 47% child poverty rate in the town of Frederickstead. So it looks beautiful. It's great to live there. COVID, we could still go outside. But 2 Category 5s, an oil refinery spewing oil, really challenges the resilience of a community. And what keeps us going are our partnerships and our collaboration and our faith in knowing that developing from within is really the only sustainable way going forward. Thank you.
Thank you. Absolutely wonderful intro to the topic. My name is Chris Armstrong. I'm the head of the Operations and Resiliency Group here at the New York Fed. One of the components that connects me a little bit with the issues of the 2 Category 5 hurricanes that struck the U.S. Virgin Islands and Puerto Rico in 2017 is part of my team is responsible for cash distribution in that region. And so certainly one that was incredibly impactful to the region, and certainly the team that we had here had many lessons learned and developed new relationships and capabilities to prevent sort of the shortage of cash during that time period. So really sort of a near and dear to our particular group's activities. Climate disasters or natural disasters in general certainly have a cost to all of us, but certainly it's much more impactful in terms of overall cost and recovery to vulnerable and low-income communities of color, children, and the elderly. And while families with resources or access to finance are able to maybe move away from a disaster area, purchase insurance, recover more quickly, that is not the same case for all communities. And certainly the financial, emotional, physical effects of climate-related disasters are longer lasting and deeper felt in those communities. I realize the same thing I think Diane said. We probably have twice as much material as we have time, and I'm sure all of the panelists would be happy to discuss further during the reception. But maybe just briefly introduce our panelists, the distinguished panelists. So we have Javier Silva, who is the Senior Associate Director of Community Engagement here at the New York Fed. Javier leads the bank's community engagement and outreach efforts for Puerto Rico and the U.S. Virgin Islands. In the middle, thank you very much for joining us today. We have Shamari Moorhead, who's the founder of Crucian Point Consulting and a board member for the St. Croix Foundation that was just mentioned. Shamari is a business owner, board member of the foundation, but it serves as a grant maker, a network builder, and advances holistic community development as a pathway to economic prosperity, self-sufficiency, and sustainability. And right directly on my left here is Miguel, or Mike Soto-Class. He's the president of Center for New Economy, and the CEN is a think tank based in Puerto Rico with offices in Washington, D.C. and Madrid. The group successfully advocated for the creation of the first earned income tax credit legislation on the island, and later on for the creation of the island's first energy regulatory framework. So welcome to all the panelists. Maybe I'll start off with Shamari. So welcome again, and thank you for joining us from St. Croix and stepping in at the very last minute, my understanding is, for Deanna James, who was unable to join us today. So we appreciate your time and willingness to speak about the community resiliency work in St. Croix. given your role as a member of the board of the foundation. Before we get into that any further, I'd like to ask if you can help frame the discussion by sharing what everyday life is like on St. Croix and maybe how it's changed since the hurricanes in 2017.
Okay. Well, thank you for having me here today. I'm happy to be in New York. I actually used to live in New York at one point in time. Life in the Virgin Islands and in St. Croix in particular, you know, for most people, what you see is it's beautiful. It's paradise. You go outside, it's warm. You know, I don't have suit jackets on every day. But it's hard, you know, from everything from, you know, I'm a business owner. I have a small team of 7 employees. And being on the board of the foundation, being on the board of the St. Croix Landmark Society, life at one point was good. You know, you could do things, you can get out, you can go places, you can, you know, have a good life. I think what the hurricanes brought was a big change in terms of we have fewer students now. We went from, I think, 15 schools on St. Croix, and we're kind of going down to about 8 or 9 schools. So my elementary school that I grew up going to is now a lumber yard. My middle school has now been completely demolished, and they're going to combine that school with some other schools that are no longer in use and now have one school instead. So we went from a place where you had schools that I could actually walk to school and that my kids now would have to take a bus because the school is not in walking distance anymore. We had a lot of people come down to work in recovery and fell in love with the Virgin Islands, and now they've stayed, which in turn drives pricing up, especially for housing. So I own a piece of land in the middle of the island, and my next door neighbor was selling for roughly $700,000, found someone from the Midwest to buy it for $1.2 million. How many people living in the Virgin Islands with an average income of, you know, somewhere between $40,000, $50,000 can afford to buy a $1.2 million property next door to me? So we have a lot of that happening where people just can't afford things anymore. My kids love Simply Lemonade. In Atlanta, I could buy 2 for $4. One bottle is $7. So for people who want to start businesses, it's increasingly hard. I have a young guy who has a local juice company, and I met him one day, and he said, I can't get money from a bank to invest in growing my business. So he sells 16.9-ounce bottles, but he wants to sell gallon bottles. He wants to sell to the grocery stores, but he can't find the investment. So he's basically taking every dollar and reinvesting. He's been around for several years, but he wants to scale, and he just can't scale because he doesn't have the funding for that. So we now have to spend on, you know, importing juices because the local vendors can't supply enough for the community we have. So there's a lot of work to be done. A lot of, you know, work that we do in philanthropy is trying to bring people together to help alleviate some of the stress from the changes that we've seen with the hurricane, changes we've seen with COVID. So.
Thank you. Maybe, Mike, maybe you could talk a little bit about how Puerto Rico was impacted by the hurricanes and maybe provide maybe 2 or 3 examples of the major disparities as a result.
Sure. So again, thanks for having me. Maybe let me give you guys some context, and some of you may know this, but others may not, about what happened after the hurricanes in Puerto Rico and in the Virgin Islands. 100% of the electrical grid went down. Most communication went down. 95% of cell towers were down. Over 90% of the roads were impassable. It was a very surreal time. And this was all taking place while the government of Puerto Rico was bankrupt. And we had been under a regime of austerity for several years. What that means is that our government was decimated when we needed them to react and to respond. They were not there. They did not have the capacity to do that. Who hurts the most from that? Well, obviously low-income communities, low-income families, and you saw a lot of that during that time in Puerto Rico. I think the opportunity that you get from this, and so much of this is negative, Chris, that I want to make sure that I also bring in some positive things. But so one opportunity that I think we get from these impacts, and that we're hoping that Puerto Rico can get, is to be able to respond to these in a quicker way in the future. And in order to do that, I think you're going to have more local contracting, for example. So we did some research at our center, and we found, this was a couple of years ago, over 90% of the contracts that were given to Puerto Rico after the hurricane were going to foreign firms. They were not going to Puerto Rican firms. And so I want to be very careful. I mean, this is not a judgment on foreign firms, on U.S. firms. This is about how do we take this terrible occurrence and make it into something that we can get something from. And so there's so much talk about, well, with these federal funds, you'll be able to grow. That won't happen if those funds are not going to local firms. So I think the opportunity in this is to make sure that we're able to spin this in a way that we can get more local firms capacitated and ready for other disasters, because this is going to happen again. You know, the program that we have at CNE is called Living with Risk. We're in the places where we're at, we live with risk. You know, hurricanes, earthquakes, pandemics now. And so I think this is, you know, the local contracting is an important opportunity for us.
I think that's excellent. So what I'm hearing is that those funds could have provided work and resources and money to stay within the economy to help build a stronger recovery. Yeah, that I certainly understand. You jumped right into, I think, a really good component of sort of what could have been different. So maybe I would go to Shamari and say, was there anything that you saw in terms of the response that, reflecting on it, you would change in addition to what Mike offered?
I think living in the Virgin Islands and Puerto Rico, or any American jurisdiction, is that for such a small place, it's a double-edged sword. You know, you can't control who comes in to work. You know, it's open to anyone. You know, any U.S. citizen can come in, and because of where we are, we don't have, you know, the economies of scale to keep costs down. So folks are coming with, you know, money from outside, and they can quickly invest. You know, if you took advantage of the housing market in the U.S. and you sold your house and you took out $400,000, you can come to Puerto Rico, the Virgin Islands, and immediately you have the cash to do things. So when you look at the recovery and what we could have done different is find ways to ensure that, yes, anyone can come in and work and buy, but we also set aside some funding to ensure that the people who live there have access to that and can be part of that recovery and that growth, because there's billions of dollars. You know, the Virgin Islands government estimates that, you know, we're going to need about $11.25 billion to recover from the storms, and that's everything from, you know, resilience on our energy grid, roads, because the amount of water just washes away the asphalt. So building roads that can withstand huge amounts of water. We have, you know, tall hills and mountains where it just comes down. So building homes and setting up codes that can withstand the wind, because, you know, like Mike said, it's not going away. You know, this is just something that we have to, you know, kind of live with. So just finding ways to make sure that the people who live there, whether they were born there or they moved from, you know, Wyoming and have been there 20 years, people who live there that, you know, are part of the economy, that are involved in helping our 300 plus nonprofits, that they can benefit from this growth.
Yeah, so what I'm hearing is that the infrastructure, building it to be more sustainable
Yes.
is critical. Otherwise, you just end up repeating the recovery effort.
Exactly, and that's, you know, I think with this last round, we were doing a lot better. You know, I was there when Hurricane Hugo hit in 1989, and so I saw some of what that recovery looked like. And I'm seeing it now, where we're spending money investing in composite poles instead of wooden poles, so that if a storm comes, it's just not going to snap overnight. In fact, we had a storm, I think last September, And I was quite surprised because normally, we get, 10, miles per hour wind, power goes out. My kids laughed because we had power nonstop, rain falling, the roads are flooded. I mean, water was up to my knees, and power stayed on, which meant that in the 5 years that's gone by, something has been done better. And so we're appreciative for, the work that's been done so far, but there's still a long way to go.
Thank you. Maybe Javier, based on your research and engagement, what would you offer as opportunities?
Yeah, sure. I'll pick up on a couple of themes here. First is the in terms of the regulators. We issued the designated disaster area letter for the region that was hit, Puerto Rico and the Virgin Islands, which provides special consideration for CRA investments in these communities for financial institutions that are on the mainland. Those that are not in their footprint, and so that letter has been extended to September 2023 to later this year, and if the need is there, it'll be extended again. The other theme that I want to pick up on is this idea of building capacity on the ground. So in community development, what we do is, we go, after the hurricane, there's an emergency period. We're not first responders, but after it was safe to do so, and talking with local stakeholders down in the area, a couple of things that came up. One is, we need assistance with organizing forums to get businesses back on track, get them back online. And so we organized with local partners there a whole series of events that focused on starting your business, working with a generator, mold mitigation, keeping your employees healthy. The other piece in terms of housing is we organized a series of foreclosure prevention and mitigation forums in Puerto Rico. And the reason for this was because, of course, Mike noted that the power was out for a long time, so folks didn't have a way to communicate with their financial institution that they were having hardship, not able to make the payment. And so this, partnering with FEMA, we organized this forum where we had electricity, computers, printers, foreclosure, all of the financial institutions were there represented to work with the community that was, all of the island was heavily struck, so we had that opportunity as well. And then, if you think about philanthropy, when the hurricane struck, a lot of foundations, for the first time started thinking about Puerto Rico and the Virgin Islands. And in some foundations, Puerto Rico was in a domestic portfolio. In other foundations, it's an international portfolio. And in some institutions, it was a special project of the president's office, right? So there was a lot of schizophrenia. This is where Puerto Rico and Virgin Islands belongs. And that served as a barrier to getting assistance out to the community. One of the things that we did here in New York is we convened the philanthropic organizations here, about close to 100 of them, to provide an update on Puerto Rico and the Virgin Islands in terms of what were the conditions at that time. This was about maybe 8 months after the hurricane, and this is what we were hearing from stakeholders. The conditions on the ground, and we brought stakeholders from both Virgin Islands and Puerto Rico to talk about what their needs are in terms of a foundation that's based, or a community-based organization, what their needs are on the ground for these foundations, the representatives that were there that day.
So I realize we're at time, and maybe I will just ask maybe Shamari and then Mike, if you could maybe share a sentence or two on how relationships or collaboration helped you in your communities, help you support the communities and get the right resources, and what you feel the value of that relationship engagement is to developing solutions.
Okay. After the hurricanes, the relationships was very important. Sinclair Foundation was one of the only places that had power. Our building has underground power, underground communication. So, everyone from our congressional representative who, her office was completely out. So she was sharing office space in the Sinclair Foundation's office. Our local Boys and Girls Club, just a number of organizations in the immediate days after the storms were at the Sinclair Foundation's office, at the conference room table in one of the small offices, making phone calls, sending emails, just having access to power, charge your phone. And so being able to collaborate in that way, sprouted this nonprofit consortium where we now have roughly 30 organizations that come together to help one another. So it's not just each organization, working off in a silo trying to do their own thing, but kind of like Frandel alluded to earlier, sharing, funding that comes in, sharing resources, sharing talent, sharing time, that's the only way that this can happen, that we can grow. You know, like you just mentioned, philanthropy in the States doesn't pay attention to the Virgin Islands. You know, almost no one pays attention to the Virgin Islands or Puerto Rico. It's a vacation place. You know, that's what we see. You know, that's what the images you see online. We don't have access to, you know, folks like the Kellogg Foundation. They don't donate to the Virgin Islands. Companies like Stripe, Squarespace, Shopify, if you want to start an online business, you don't have access to any of those resources. I could be in Nigeria and start a Stripe account. I can't be in the Virgin Islands and start a Stripe account. So things like that we need, you know, philanthropy resources to pay attention and invest in the Virgin Islands, you know, give to the organizations that help. Because after the storm, I was in Atlanta, and we were having phone calls, getting groups from North Carolina, getting groups from Georgia, New York, to organize resources and send things down. We had, you know, 40-foot containers going down. The foundation organized groups to help distribute this. So we were there faster than, you know, government agencies can, you know, put in purchase orders, can, you know, set up schedules. We had the first set of containers going out. So that collaboration that you can only get through nonprofit organizations who don't have to go through the red tape of a government organization really, really helps. And the only way to do that is for funding for things like operations, because we can get it, like Frandel said, for programming. We can get millions of dollars for programming, but we can't get it to staff the organizations to make it happen.
Mike?
So collaboration is key, you're right, but so is coordination. I think they go hand in hand. And in this graph, I brought one graph that I think they put up earlier, but if they can put it back on again, if we remember just one point about what's happening in Puerto Rico, I think it should be that the reconstruction in Puerto Rico is gravely delayed. And what this graph shows is the blue line is how far along we were after Georges. We did so much more in a year after Georges than we've been able to now. Why? For a lot of reasons. There's a lot, I mean, it's very bureaucratic. I remember right after the hurricane, if you wanted to apply to FEMA for aid, you had to do it online. And this was when there was no power, much less communication. So part of what we had to do was set up, you know, the civic sector stood up, they brought satellite phones, and we did that. But so the coordination is important, and we're so gravely delayed. And why is this important? Because Puerto Rico will go as our reconstruction goes. The Virgin Islands will go as the reconstruction goes. And if we can't get reconstruction right, which we're not getting right, then we're not going to go very far. And so one thing that we propose and that has gotten a lot of support has been to create a task force like there was for Superstorm Sandy. Why is that important? Because that incentivizes and promotes collaboration and coordination. You have a task force, you have everybody sitting together. You can't have one group saying, well, we need this, and another group saying, no, we need that. They're right in front of each other. It helps it to move along. We're hopeful that the government of Puerto Rico will go for this task force idea, and I think it's gravely important that we push for it, because otherwise, you know, it could be another 5 years. And we're not talking about graphs and numbers. What this means is that there's families without a roof over their head, and that there are kids that can't go back to school because the school is not fixed. So it's not about, you know, percentages or numbers or billions of dollars. It's about real needs and real people's lives.
Mike, Shamari, Javier, thank you so much for sharing your expertise and experience. And thank you for everything you're doing. Really appreciate it.
Thank you very much.
Turning it back to you, Otho.
Thank you, Chris. Thank you, Mike, Shamari, and Javier, and Frandel for those really wonderful, illuminating comments. Thank you. Access to high-speed internet seems as important today as access to electricity if you want to connect to opportunity and if you want equitable growth. I'm going to invite Pam Dyson, EVP and Chief Investment Officer, and our panelists to the stage. But before the panel gets going, please have a seat. I'm going to invite our final speaker, Derek Blakeney, to the podium. Derek is a freshman at Cardinal Hayes High School. His interests include STEM, basketball, and the stock market. His future includes a career in agricultural engineering. For his public debut speaking, Derek Blakeney.
If we think back to when we were in quarantine, starting back in 2020, it was essential for students to have not only a working connection with the internet, but a high-speed connection. Access to high-speed internet was crucial for learning. I personally remember moments during quarantine when I would get kicked out of Zoom meetings because my connection was bad. Not only would this affect my learning at times, it would get frustrating and stressful, really stressful. Especially when I would be preparing for upcoming tests and find myself missing out on parts of lessons that were crucial and important for preparation. Imagine that happening to you. When that happened to me, I would have to take more time out of my day to learn the material that I missed out on. I could have been using that time more effectively on other subjects or skills. During those moments, I really wished I had a high-speed working internet connection. Good afternoon, ladies and gentlemen. My name is Derek Blakeney, and I am a freshman at Cardinal Hayes High School. I am so honored to be in front of you all with the opportunity to speak and share my experience as a student who has benefited from broadband and high-speed internet. I think students and people who have access to high-speed internet have a meaningful advantage over those who don't. Just imagine the lives of students and their families who didn't have access to a computer or to the internet at home during the pandemic. How hard it must have been to learn the material from home and the extra mile they had to go to learn. And we know how important education is to prepare us to participate and benefit from the economy. Even though I was struggling a bit with the technology I had, I was grateful that I had access to a computer and the internet. Online learning taught me that having access to technology is something we shouldn't take granted for. Not only was technology crucial to my learning, it was one of the ways for me to connect to friends and people in the outside world when we were stuck at home during the pandemic. I often used my phone to talk with friends from my school that I couldn't socialize with in person and contacting family members that lived far from me to check up on them. Without the internet, communications with others outside of my home would have been close to impossible and would have made me feel more isolated. I can only imagine how isolated and alone other students who didn't have the right to technology would have felt. For kids my age, socialization is an important part of our development, so not having technology during this time would have been depressing and sad for a kid with no connection to the outside world. During quarantine, my family had to cut down on spending, so in order for me to have my own spending money, I participated in a remote paid program my sister had discovered. My sister had discovered this program called the Animation Project. The Animation Project is a nonprofit organization that nurtures the social and emotional growth of young people using digital arts as a therapeutic medium and workforce development tool. Participants got paid to work with animators on new projects by collaborating with them on our ideas. Over the course of 8 weeks, I learned how to create animations, different ways to express myself through technology, and how to manage my emotions. Not only was this a space where I learned new skills, but it was a safe space for me to learn new ways to work through my current situation, even when I was feeling mixed emotions. This made me aware of the many ways technology could be used. High-speed internet and technology were vital during the pandemic, but it remains an important part of our future as a society, even after the pandemic. The pandemic opened the door to remote and hybrid working environments, inspired new forms of startup businesses, and encouraged us to interact with people on the other side of the world. I know that my family relied on the internet for education, for work, and for health. With all those tools, skills, and opportunities that are made possible with access to broadband, and if we want an economy that works for all, it's important that everyone can have easy access to broadband. Thank you.
Thank you very much, Derek, for that personal perspective around the importance of technology and the importance of broadband and access to that broadband. I'm always moved by young people because they bring so much passion and energy to the challenges we face in today's world. Hopefully the panel today will give us some vision around how we can address those challenges. So today, this panel, the theme is broadband and connecting to opportunity. And as Derek said, and you'll hear from our panelists, you know, we heard some inspiring conversation in panels today around what an equitable economy looks like. I will argue that not having access to broadband and being connected digitally really decreases your ability to have that equity no matter what field you're in or what you're doing. I'm Pam Dyson. I'm the Chief Information Officer and Head of the Technology Program for the New York Fed. Welcome all of you today. We're glad to have you here for this discussion. You know, the stakes around broadband and access is high, right? Our most marginalized communities are those that are the most unfairly impacted by that lack of access. So improving our nation's digital infrastructure is a daunting challenge. You know, you have rural areas that don't have high-speed internet and those types of things, so it is very complicated and daunting. But it's also an exciting opportunity for innovation and collaboration. So I'd like to introduce to you all today our expert leaders who are helping to build an economy for all and helping to bridge that digital gap, right? And so today we are joined by Joshua Breitbart. Joshua is the Senior Vice President of Connect All at Empire State Development. In that role, Joshua serves as the Director of the Division of Broadband Access, where he oversees the statewide digital equity plan, is responsible for administering over $1 billion of public investments across New York. Welcome, Joshua.
Thank you.
We're also joined by Catherine DeWitt, the Project Director for the Broadband Access Initiative at the Pew Charitable Trust. Catherine directs Pew's Broadband Access Initiative, which works to accelerate efforts to connect millions of Americans to affordable, reliable, high-speed internet. Welcome, Catherine.
Thank you.
And then last but not least, certainly not least, I'm joined by my colleague, Ortho Kerr, the Director of Strategic Partnerships and Impact Investing here at the Federal Reserve Bank of New York. Ortho's role here includes leading the bank's efforts to close the digital divide. He's also been working on this topic with states throughout the Northeast, as well as Puerto Rico and the U.S. Virgin Islands. So welcome all of you to the panel today. So I know we're running short on time, so we're going to jump right into it. And I'm going to start with a foundational question for you, Catherine. So based on the research that Pew is leading on this topic, could you tell us what broadband access looks like today in the U.S.? How far are we from 100% connectivity? And what does closing the digital divide look like, and why is it so important?
All important places for us to start. And I think I'm not sure that I can actually articulate it better than the gentleman who just opened up for us right now on why closing the digital divide is so important. But I think before we jump into the definitions of the what and the why, it's important, well, actually to start with the what. So when we talk about the digital divide, what do we actually mean? That means the difference between folks who have access to an affordable, reliable and high-speed internet connection. So that's a connection that is actually useful for a lot of the ways that we use our internet in our daily lives today. Whether or not folks have access to that in the home, if they can afford that connection, if they have the devices and the skills to use that connection in a meaningful way. I'll come back to that in a minute. If they have access to training for using both the devices and then kind of building that skill set around that. And then finally, and this is a newer thing that we're starting to see in the field and what we're seeing with the state broadband offices and work that's emerging across the country, are there ecosystems of support in the communities, whether it's through state and local government, whether it's through our civil institutions, to support and enable that access, the training, access to devices. So when we're talking about the digital divide, it is the gap between those who have access to all those things and those who don't. And the numbers are difficult to measure for a number of reasons that I won't unpack right here. But what I can say is that the digital divide does disproportionately affect low-income households across the country. And that cuts across geography, that cuts across race, ethnicity, gender. So when we are talking about the importance of closing the digital divide, it really does come back to, are we trying to build an economy for all? And if we are, then we really do need to close the digital divide.
Yeah, and what became apparent to me during the pandemic was the reliance on high-speed internet for education, right? Because kids worked virtually for almost 2 years. And so what is the data that has come out of that? And that's for anybody on the panel. And what are we doing to bridge that gap where some people were left behind?
I don't know if you have New York specific data that you'd be interested in sharing, or?
Not offhand, but.
Okay. Sorry.
So the main things that have come out of that are public funding that's available from the Recovery Act and the Infrastructure Act for broadband, for both emergency connectivity, including subsidies for existing internet access, as well as significant money to invest in broadband infrastructure. And a good portion of those funds are flowing through states and territories. And so every state and territory at this point has set up a state broadband office to administer those funds. One of the challenges that we have, in addition to continuing efforts that were put about on an emergency basis, and I was with the city of New York at that time, and it was quite an effort, but also to deliver the funding sources and the programs in a holistic way, because there's so many different barriers to broadband, and particularly, and this is what's so great about this event today, broadband is tied into so many different aspects of the economy. It also, the challenges that people face are also, very oftentimes interwoven in people's lives. It is a matter of infrastructure. It is a matter of awareness, education, trust, affordability. It's a technical issue. It's a social issue. And so the challenge that we have now is to coordinate the delivery of those funding sources in a holistic way that addresses that for each community within our state. But conversations like this that speak to the way that broadband is integrated in the need for economic opportunity, I think is a great sign that we have the right perspective on the problem.
Pam, I think one of the things that I'd like to lift up is what's happened in the last year. And you two, these two are rock stars in this space, by the way. I'm here because I put the panel together. But these two have been in this space for a while now. And what's really exciting is that in the last year, we've seen some capital come rushing into the space that hadn't been here before. And so this is a really new, really wonderful environment. And these two have been involved in this space prior to the cash coming in. But with the Infrastructure Investment and Jobs Act, we have $42 billion that is going toward the BEAD program, which is about deploying capital toward infrastructure and getting the stuff out there that needs to be built. But then there's about, is it $2 billion? $2.75 billion for the DEA program, which is the Digital Equity Act, which is touching upon all of those softer areas that have less to do with infrastructure and more about giving people the ability, the skill set, if you will, the devices, if you will, to have access. So it's meaningless to have the infrastructure if you don't know how to get to that, use that infrastructure. And that's what's really exciting about the last year. And we've seen states just rushing to build organizations. In the Northeast, you've seen Maine and Vermont grow their teams by 2 and 3 and 4 times just because of this program. And perhaps you all can shed some light on what the difference is now between even 16 months ago.
Yeah, and one of the things, and we've got 9 open positions right now in my office, so we're trying to grow as fast as possible because we have so much opportunity with that public funding, and the governor and the state legislature have added an additional $300 million to what we'll be receiving from the federal government, and that's how we get to that $1 billion investment total. And the governor has created programs to deliver broadband investments in affordable housing and public infrastructure, grants and partnerships with internet service providers, as well as promoting the Affordable Connectivity Program, which is a subsidy that's now available for broadband service, and the digital equity funding. And it's really, again, that combination of tools that we have at the state level that creates such an opportunity. I also think, Pam, what you were saying, I totally agree that the digital divide has been such an economic limiter, and one that has driven racial inequity and economic inequity through so much of society and our economy. I think now we have an opportunity to do the reverse. And I think that investments in broadband are one of the most profound drivers of economic opportunity that we can make anywhere. And what's so powerful, I see that we just completed a public infrastructure project in partnership with the village of Sherburne and their electric utility in Shenango County, New York. It's a small village, I think population about 1,300, but being able to deliver the investment in this way, I think it's one of the most targeted and powerful economic development tools we can make. And now we've got the public resources and working with the private sector, we can really multiply that. Because it's not just the public investment that's there. There's a significant amount of private capital too, and I actually think the states that are going to succeed are the ones that are going to effectively wed their public investment dollars with the private investment, but in a way that is really oriented towards the public benefit, capturing the economic impact, not just in affordability and adoption, but in ownership and employment, in the services that go on top of the internet. I think that combination of tools is what's going to really allow us to build economic opportunity and an economy that works for all through these investments.
Do you mind if I press on
No, absolutely.
few points there? I think a couple of points that I want to elevate. I think first, when it comes to the stand-up of offices themselves, when Josh mentions that he's got 9 open positions right now, that's 9 of how many total?
Well, we have 5 in the office now, so we have 9 open positions, and I think more to come.
Okay, so this isn't, like, we're not talking about state departments of transportation, which can employ hundreds of people. So let's just,
or have historically.
yes, or have historically done that. So in many cases, we are talking about state broadband offices that are newly established. That's more than half of them. In some cases, they may not be hiring 15 or more people. They may be, for example, capped in state legislation with their FTE at 5, as is the state broadband office in Texas. So we are not only looking at states that are responsible for administering literally billions in federal dollars. Oh, by the way, they're also trying to use this to right a market failure. Oh, by the way, they're also responsible for implementing a lot of policy measures on top of these federal funds that are also new, but very good progress. They're also doing it sometimes with 5 people or fewer, sometimes with contractors. So one of the great things that has emerged over the last year is not only awareness of all of this, but also more stakeholders like folks in this room, like our partners at the Federal Reserve, who have raised their hands and said, how can we help? funders, philanthropy, financial institutions, healthcare entities who have said, we know that we have skin in the game here. We know that we're going to benefit from the outcomes of these investments. How can we be partners right now to advise on the planning process that Josh's team is going through right now? States are required by law to complete 5-year action plans. They're required to get very specific about how they are going to spend those funds. They are also required by law to engage historically marginalized communities that have otherwise been left behind in prior federal broadband programs. This is great progress because it's going to ensure that those who have been left behind will not be left behind moving forward. It's also going to give us a much better understanding, going back to your opening question, of how many folks actually have access to internet and those who don't. So it's going to give us a level of precision and also accountability and transparency that we simply have not had before when it comes to broadband policy. So sorry, Pam, I cut you off.
That's fine. No, we've talked about marginalized communities, but also urban versus rural. So Josh, I was going to ask you about that in the context of standing up these offices and so forth. What I hear as Chief Information Officer at the bank is when I'm working from my home in a rural area, I can't utilize the tools that you're offering me because I don't have access to the speed of broadband that I need to do that. Is there a dedicated focus, or again, in this context, how are we focused on rural areas as well as urban areas?
Yeah, it's a great question, and I think the key, one of the things I really hope is that it's not a versus, because I do think that a lot of the ways that the internet has been delivered has been divisive. It's created social divisions, has created divisions that have followed in urban areas historic patterns of redlining, or has left particularly lower income rural areas, tribal nations, out of the digital economy. And so I think we have to take an approach that is one of, this is a unified collaborative effort. And I think that that's one of the just incredible opportunities, particularly in an area like New York. We've made progress. We're building on top of some success in making investments in infrastructure to expand ISPs in some of the rural areas. But wherever you are at this point in the country, if you're not connected to internet for whatever combination of reasons, you are among the hardest to reach people in our society. And this is the incredible opportunity that we have in our state broadband offices in New York in particular. Is that's the assignment: reach the hardest to reach people, down to actually engaging in conversations, having convenings around the state, and figuring out how to get a wire to you or how to get services to you. And I think that for that to succeed, both in the broadband capacity and for what we then do, we have to really take advantage of that opportunity now to layer on, build on all the other efforts to engage people, whether it's with census, voting, vaccines, whatever the drivers are for that outreach, we need to build on. But then we need to also be working in concert with all the other programs that deliver starting an online business, right? If you don't have internet access, that service means nothing to you. But once you get the internet access, let's be right there with those additional services. And I think that's the invitation is, partner with us in maximizing the impact that effort can have. Now, just to more specifically address your question, the needs in every community are very different. And the history in every community is different if you've been underserved in such a critical way. And so, every conversation needs to take that into account. And the key is working with local community partners. And that's true neighborhood by neighborhood in New York City, county by county throughout the state. So we're very fortunate in New York to have great, you mentioned planning, great planning directors, planning partners on the regional and county level, but also community organizations. Libraries are key to this effort, and that's really the key component. And then, understanding the internet service provider, are they there? Are they delivering services at an affordable level? Can we bring in the subsidy effort? Do we need to invest in infrastructure to reach people who have where there's none? Do we need to give grants to those ISPs to expand? Do we need to promote competition in certain regions because that's the sustainable driver? That's why planning on a county and regional level is so key.
Pam, I'd like to just offer up that, Catherine mentioned that these state broadband offices are capacity constrained, and working with folks like the Fed, we can be helpful. And I'd like to just honor two colleagues of mine, Ambika Nair and Belicia Rodriguez, who have volunteered and stepped up to offer mapping resources to the northeastern states so that they can understand where the need is, and so that each state can then go out and figure out where they need to focus their attention.
That's excellent.
If I may add to that, I think that we have such an opportunity at this moment to, as we think about impact, how are we measuring impact? What do we want to understand from this investment? And that's going to vary by community. It will vary by state, as it should. But there's also the notion of what can we understand more at a macro level about these markets, because building broadband networks, understanding consumers and their interaction with it, that's very capital intensive. And when we talk about affordability, it's important for us to press on that a little bit harder and say, are we talking about affordability for the consumer overall? Or are we talking about affordability for low-income families? Because one really important learning from the pandemic was understanding that families were cutting costs on other household expenses, rent, clothing, food, to pay for their internet subscription and to pay for those devices. And you have to group those two things together. So we are at a very important moment right now to start thinking about how do we want to better understand this market and the role of public intervention, the role of private capital, and in creating a more equitable market that serves customers across the board. So if I could just put that plug out to folks in this room.
So Ortho, I really kind of wanted to talk a little bit about the positive impacts, right? That what are the positive economic impacts that broadband can bring to communities? I know you've been leading a lot of that work at the Fed. And could you talk to us a little bit about what you've seen from a positive impact space?
Sure. What I can share is that we began this journey about 1.5 years ago. President Williams did a road tour, and he was doing a virtual road tour up in upstate New York in the North Country, talking to communities up there, which contains the Adirondacks. And in the conversations, and I know that Jack Goot, who's going to finish this event this evening, believes very much in the importance of our doing outreach. And this is the kind of outreach that we do, so we can hear from communities and what's working and what's not working. And what we heard about 1.5 years ago was that the absence of broadband was really, really devastating. The absence of it meant the absence of telehealth, the absence of education, as we heard, the absence of working opportunities, the absence in rural communities. By having broadband, it opens up new markets that you can sell to that you might not otherwise have access to. So the positive is telehealth, education, work opportunities, and the like. And we're seeing that. I know that the mayor of Sherburne wanted to be here and also speak, but he wanted to speak to that opportunity that he sees coming to his community.
So as you can tell, we're just warming up, but we're out of time. And so please, if you have additional questions, reach out to the panel during the reception area and get more information on broadband efforts and bringing that access to all of our community. With that, I'm going to turn it over to my colleague, Jack Goot, to close us out today. Thank you very much for our very esteemed panel today.
Thank you very much, Pam. Thank you very much, Pam, and thank you to all of the panelists, and a special thank you to Derek Blankney for sharing his experience and perspective. Derek, if this was your debut as a public speaker, you're going to do very, very well. Really well done, but thank you. So we've concluded today's formal agenda, and I want to thank all of our colleagues here at the New York Fed who made this possible, our panelists, speakers, and all of our attendees, both in person and virtually. As President Williams mentioned, and I'm going to keep it very short because there is a reception, and and that's more important. But as President Williams did mention, this is not a one-off, but rather an ongoing commitment from the New York Fed to understanding the constraints and challenges to broadening economic participation and opportunity. And while we focus on addressing challenges, it's essential to keep in mind that this is really about unlocking untapped potential. This is an opportunity. This is not a chore. I think there's a lot to gain from all of these efforts, as we've heard here today. And I want us to think about some of these issues, and if we can just imagine the impact, something like 50 well-funded new small businesses run by people like Adina, hopefully easier than it's been for Adina, whom we've known for a long time, in a community in the Bronx, the impact that that would have on that community more broadly. Or if we think about the benefits of full, high-speed broadband access across the Adirondack region and what that would mean for students, for businesses, and for communities. Or finally, when we think about the long-term opportunities for development, for investment, in a climate-resilient Puerto Rico, and even just the peace of mind that that would provide to communities that have had to rebuild over and over again, and we know that that's an issue. If we think about the impact of that and having that kind of resiliency, what that would mean in the long term, I think we recognize that what we're talking about here today is really about opportunities and opportunities to unlock, again, what I think is almost unlimited potential. So with that, I encourage all of you to stay, to join us for a glass of wine, perhaps, some cheese, and to speak amongst ourselves. And once again, thank you all for joining us here at the New York Fed, and thank you to our organizers. Thank you.